Hello folks, welcome to Pro Trader Strategies Market Commentary for Friday, May the 14th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I'm going to do the same thing for you all in these daily market commentaries, but I'm also going to talk about my option strategies I implement based on those assumptions I come up with in that technical analysis. For you folks, I've also streamlined the process for you guys to find the optimal option strategy for any given assumption. We don't just pick an option strategy out of the hat, say a bullish assumption, we go to the long call. Not always. We need to look at the option pricing and determine whether those are cheap or expensive, and then that tells us the option strategy we need to implement. So please check those guidelines out at Pro Trader Strategies. We're doing a whole new course right now on swing trade setups. All right, so check that out. Also, if you take anything away, please like that down there at the bottom there. That really does help us out. So smash that like button for us. All right, economic data. Nothing really going across the pond. They must still be celebrating that holiday that probably will go on for like a month now with European holidays, right? So anyway, I don't know what the holiday is that they have, but pretty quiet across the pond. But here in the United States, we got all kinds of economic data. We got the retail sales number coming in a little bit below expectation, actually quite a bit below expectation, especially after last month's nice reading. We got unchanged retail sales, expected to be, up by 1%. Last month's reading, if you guys remember, was right around 10%, 9.8. They revised it up by 1 full percentage point. So making up a little bit for that headline missing by a percentage point. We revised the last month's number up a little bit. So it kind of washes out nicely there. Importer prices, this is going to be speaking to inflation in line with expectations, maybe a slight tick higher by 1.1%. Last month's number revised up by 0.2% there. Core retail sales, remember this is going to strip out automobiles, coming in at negative 0.8%, expected to be a positive 0.5%. So missing on that headline number by over 1%. Though they did revise last month's number up by 0.5%. So it kind of makes up a little bit there. And then core retail sales, where you sales stripping out the automobiles. So when we were expecting retail sales to do very well here on the automobile front, keep in mind we have that chip shortage, and that's kind of holding off on the automobile sales. And something I've been meaning to mention for quite some time. If you go to like the auctions where the car industry goes to buy their cars to put on their lots, those cars on the auction, the wholesale cars are going for retail prices, folks. So that is because of this chip shortage, especially for the F-150, which is the worker's man's go-to truck. Those are going through the roof right now because of this chip shortage. All right, core retail sales not looking good either. With retail sales, cars don't seem to be moving as much as I was expecting to see here. Capacity utilization coming in line with expectations at right around 75%. Industrial production comes off a little bit by 0.2%, but keep in mind we've been having all kinds of supply chain issues, and it's not really surprising to see this industrial production pull back a little bit, even though we are seeing some demand here. All right, we've been seeing the manufacturing sector do very well, seeing the demand for those distillates from crude oil, remember. Now, all of those things showing, upward trajectories. Now we get this pullback. I think it's probably due to the supply chain issues that we're seeing. And a nice revision to last month's number, higher by 1 full percentage point. So that ultimately is what is helping our equities make a move to the upside, is all of these revisions. The headline numbers, not so much to really write home about, but the revisions were very nice and kind of making up for those headline numbers. All right, so University of Michigan consumer sentiment coming off a little bit, was expected to be 90, coming in at 82, so not really very confident there for the individual. Business inventories in line with expectations. And finally, University of Michigan consumer sentiment for inflation expectations coming in at 4.6%. Remember, last month's number was right around 3.5, 3.7. They revised that down slightly, but this headline number showing these inflation worries that everybody's been talking about. All right, so sorry it was a little bit long, but we got to talk about those things to see how we think that's going to be impacting the overall markets. Now, we've got the crude oil here moving a little bit higher. Now, it is probably based on those revisions more so. We're getting this move higher with the pipeline coming back online. They paid their ransom, so that must be all good. We've got crude oil moving higher here, though. As yesterday we heard about, you know, the lifting of the mask mandates, things like that. People are expected to be getting out there. Maybe we'll get those roaring 20s going here. Gold futures moving higher, not unexpected, because I think that we're a little bit behind the curve on this inflation worries. It should be driving gold higher. Bitcoin making a move up to the upside today, up 3,000 after yesterday was just really bad based, you know, everybody ripping on Elon Musk about the pump and dump that he's been doing. He got rid of all of it on Bitcoin from his personal wallet, I guess, and Tesla still owns it, but he also did that whole pump and dump with Doge or Dogecoin, which has no intrinsic value. At least Bitcoin, when we're talking about Bitcoin, there is a limited supply of those. So that makes sense to me on the supply-demand curve and having a resource that is limited rather than a non-fungible token like Dogecoin. All right, so we've got bonds moving higher by 0.5 point here on the day. I think they're just a little bit overdone to the downside. You know, if this inflation is transitory, interest rates aren't going to be rising anytime really soon. VIX, oh man, the 20s, how sweet they were for the short period of time we got to spin with you. Anyway, that's because we're seeing the equities make a move to the upside again today, making nice bottoms yesterday. We talked about that in the daily market commentary, and yesterday I found a couple of opportunities that we'll talk about here in a moment based on the webinar we did on swing trade. So we've got a nice move to the upside here in NASDAQ. We're going to see this as a theme across the board. Dow Jones Industrial Average up 300 points on the day. Everything coming down. We tested that 50-day simple moving average and really strong into the close. And again, similar situation with the E-mini S&Ps. This is very bullish. You know, anytime you got an engulfing pattern or a half back is what we like to say, if it can retrace a big down day at least halfway up, that is bullish. Okay, that shows a momentum shift there, and that's what we saw there in the E-mini S&Ps. And you can see yesterday after the daily market commentary, sorry, I don't know why this is doing it, we did get a little bit of sell-off, but headed strong into the close with some profit taking going on. Overnight inventory, very long. Check this out. And then we got the economic data, another move to the upside. No attempt to flush those folks out, so that is very bullish. So I'm looking over here. I wanted to talk about with the Dow Jones Industrial Average. Now, don't have a ton of exposure to the Dow Jones Industrial Average right now, and I wanted to get a little bit. I looked at this with the SPY, the SPX, both very similar setups on a swing type trade where we've gone down, tested that 50-day simple moving average, got a nice bullish move yesterday, and then today a follow through, the confirmation basically. So I decided to jump in here and take advantage of this. If we go up and make some new highs here in the Dow Jones, that would be unequivocally what I'm looking for in this trade. So with the DIA, Dow Jones Industrial Average Spider ETF, I went in and did the September. So that's the longer duration. That if you watch this video on the swing trades, I like to set this trade based up on the long duration option. So I went into the September and bought the 355 calls in there. And then for the calendar, because I did this on the long call calendar, went in and sold the June 355 calls in there. I did this as a total debit of $5.46. Now remember, with the option contract multiplier, for every one contract you do, you have to multiply that by 100, because an option is equivalent to 100 of the underlying, okay? So it's not like a bait and switch, folks. It looks like you're paying $5.46, but when you pull it up, it looks like an extra 100 times that, so $546 in this case. That's because it's equivalent to 100 of the underlying for every one contract I do. All right, so with a move up to 355, I'd risk one to make one. That is during the lifetime of my short June option, the 355 calls I'm short. If I don't reach that, those expire worthless. Now my upside potential is unlimited. I will likely look to roll that out in time and higher in order to increase that spread width, lower the overall cost basis that I paid for that, and try to increase my probabilities of success by doing that, because I can lower my break even by lowering my cost basis, right? So that's what we try to do with these trades. That's what all I've done today so far. Keeping an eye on my portfolio, like this nice move to the upside. A little bit worried about Amazon yesterday because I am still short some puts in there from that earnings. Probably held on to them a little bit too long, but playing out the probabilities. And I would be happy to get long Amazon right now at 3,100 because that's where I'm short those puts in the May. They expire in 7 days, so not too concerned about Amazon, but probably rode this one out a little too long. As you can see on their earnings, they've done nothing but really slide, and that was based on a good earnings. So that's why I stuck with this. My break even is below where this Fibonacci support is. So, you know, I'm holding it out. Doesn't look good in my portfolio necessarily, but having said that, with this big move to the upside today, the theta decay, the gamma trade, gamma getting into that, you can check out my gamma trades as well. But anyway, making that move to the upside, still in this trade from the earnings. That's all I got for you guys. Like I said, it really does help if you do smash that. And if you don't, take that. All right, man. Take care. Take it easy. Have a great week.